You've probably heard the stories, right? Brilliant people, certified geniuses who dive into the financial markets and just get completely wiped out. It makes you wonder, if being smart is supposed to be the key, why isn't it enough to actually win? Well, today, we're going to dig into the dual engine that really powers market success.
So let's just get right to it. Why do smart people lose money in the markets? I mean, a high IQ, this ability to analyze tons of data and spot patterns, you'd think that would be a golden ticket. But so often, it fails spectacularly when real money is on the line. It's a puzzle, for sure, but the answer is actually simpler and way more profound than you might think.
And here it is. The secret is that success isn't powered by a single engine. You need two of them. Think of it like a supercar. Your analytical mind, your IQ, that's the raw horsepower. It's the engine. But your emotional mind, your EQ, well, that's your steering, your brakes, your traction control. If those two aren't working together perfectly, you're going to spin out and crash.
All right, so let's break this down. To really get a handle on this, we've got to define what these two engines actually are. Think of it as opening up your toolkit and seeing what you've got to work with.
This slide just lays it out so clearly. On one side, you're the analyst. That's your IQ talking. That's the part of your brain that's doing the data analysis, building financial models, and coming up with a brilliant strategy. But on the other side, you have to be the stoic, and that is all EQ. This is your inner manager. It's the voice that enforces discipline, that whispers, be patient, and most importantly, keeps fear and greed from grabbing the steering wheel.
Okay, and here's a really crucial point. Not everyone needs the exact same mix of these two engines. The right balance, it totally depends on the game you've decided to play. Are you a trader, an investor, or a speculator? Let's check out the playbook for each one.
First up, the trader. You can think of traders as the sprinters of the market. Their game is all about speed, about precision, making split-second decisions. It's a super high-pressure, fast-twitch kind of world.
Now look at this engine mix. Of course, a trader needs a high IQ, and 85% is serious brain power for analyzing data on the fly. But check out the EQ. It is maxed out at 100%. And why is that? Because in the heat of battle, with prices whipping all over the place, your own emotion is your #1 enemy. The ability to stay ice cold and just execute is everything.
So their whole skill set is this incredible balancing act. The quick analytical decisions, that's your IQ. But having the discipline to stick to your risk management rules, to not get emotional over a win or a loss, that is pure, unadulterated EQ. And that flawless execution everyone chases, that's only possible when both engines are firing in perfect sync.
All right, let's switch gears to our second role. Meet the investor, the market's marathoner. We're not talking about minutes or hours here. We're talking about years, sometimes even decades. Their whole goal is to find incredible assets and just hold on.
Now, would you look at the investor's engine mix? The IQ is cranked up to 90%. You need some serious analytical firepower to value a company over the next decade. But that EQ is literally off the charts. Why 100% plus? Because the emotional strength it takes to do nothing, to sit on your hands and hold through terrifying market crashes and wild euphoric bubbles, that might just be the rarest skill in finance.
And their essential skills really show this. The deep analysis, the long-term vision, that's all IQ. But having the patience to ride out a 50% drop in your portfolio, having the guts to resist selling when everyone else is panicking or buying when everyone is greedy, that, my friends, is the ultimate test of your emotional strength.
And finally, we have our third archetype, the speculator. This is the high-stakes player. They aren't necessarily looking at long-term value. They're hunting for powerful, short to medium-term events that can cause explosive moves, which means explosive gains and, yeah, devastating losses.
Their engine mix is really interesting. The IQ is still high, at 75%. You've got to be smart enough to spot a real catalyst from all the noise. But look at that EQ. Again, it's maxed out. For the speculator, emotional control isn't just a nice-to-have. It's the only thing standing between them and blowing up their account. It's their primary defense.
So this role, it demands an IQ that's sharp enough to see the opportunity before others do. But then it takes massive emotional discipline to manage that huge risk, to know exactly when to get out, and, this is the big one, to control that overwhelming greed that's screaming at you to just hold on for one more day. It's a total emotional tightrope.
So, this brings us to the real heart of the matter. We've looked at the roles, we've defined the engines, now let's see why having just one of these engines firing on all cylinders isn't just not enough, it's actually really dangerous.
Let's run a little thought experiment.
What happens when you have a brilliant person, just off-the-charts IQ, but their emotional discipline, their EQ, is weak? What does that actually look like in the real world?
Well, it looks like a complete recipe for disaster. It's the genius who's so smart they get stuck in analysis paralysis and can never pull the trigger. It's the person who takes a loss, gets mad, and starts revenge trading to try and make it back, usually losing even more. They set stop losses and then just ignore them. They chase hype because that fear of missing out, that FOMO, it just completely overrides their logic.
Okay, but what about the flip side? What if you are cool as a cucumber, incredibly disciplined, patient, calm, but your analytical engine is running on fumes? You've got high EQ but a low IQ for the markets.
Well, that is the path to stagnation. You end up making uninformed decisions, but you make them with absolute confidence. You'll patiently hold a losing asset all the way down to zero, calmly telling yourself it's going to come back. You're so calm you miss obvious opportunities right in front of you. Or maybe worst of all, you followed terrible advice with unwavering discipline. You're basically a passenger in a car that is driving very calmly right off a cliff.
So, this is the goal. This is what we're all shooting for. Mastery isn't about just having a high IQ or a high EQ. It's about achieving what we can call market synergy. It's this incredible state where your analytical skill and your emotional discipline fuse together to create results that are way bigger than what either one to do alone. Your IQ finds the path, and your EQ lets you actually walk it without tripping over your own feet.
Which, of course, leads to the big question. How do you actually do it? How do you master your own dual engine and find that perfect balance for you?
Well, here's a simple 3-step game plan. First, you have to know your role, your personality, your goals, your time frame. They'll tell you which game you should be playing. Second, and this is the hard part, be brutally honest with yourself. Which is your weaker engine? Are you the brilliant but impulsive type, or are you the calm but uninformed type? And third, train both, consistently. Read, study, and practice to boost your IQ, and journal, meditate, and reflect on your decisions to strengthen that EQ.
And hey, if you ever start to doubt just how powerful your emotional engine really is, just remember this timeless piece of wisdom. At its very core, the market is a battle of emotions. And in that battle, patience and discipline, the absolute hallmarks of a high EQ, are your ultimate superpowers.